how can you use liquidity to increase your win rate? So essentially, liquidity comes in handy for two things, right? And that is for sponsoring your moves and to use as targets. Now, there's three main types of liquidity that I like to use, and that is equal highs and equal lows, old highs and old lows, and session highs and session lows. So let's get into how I actually use them within my trades to generate high probability conditions. We'll start with the higher time frame context. So already, this is where I'm going to be looking for liquidity targets. So previously, price had been in a consolidation, right? You can see we failed to get any closures down here or up here. Price had just been moving sideways. But then yesterday, we got a strong closure above these highs, signifying that price is no longer in a consolidation, right? And essentially, the liquidity targets that I noticed straight away was these equal highs, right? They're relative equal highs. That is quite far away, right? That is a further liquidity target, but it is liquidity nonetheless. And it's actually resting below this inefficiency. I believe it's on the monthly. Yeah, it's resting below this monthly FVG, right? Which to me makes it even more high probability. So that is the first liquidity target. However, it's quite a way away, and we do have more short-term targets before reaching there. So we also have this high here. That is an old high. So I like to use old highs and old lows as liquidity targets. And when it's a previous day's low, previous week's, previous month's low, it actually becomes even stronger, right? There's even more liquidity at that area. So essentially, that was my first target, that previous day's high. And then we had this old high as well, which was my target after that, right? So I was anticipating a bullish day. And if we jump down onto the 4 hour, I was actually anticipating price to push to the upside from this 4 hour fair value gap. But you'll see that we actually missed it, right? Price didn't actually get into there. But if we go on GBP USD, that exact same FVG was traded into. So that's SMT divergence. And essentially, it's a manipulation. So the fact that we didn't come into this FVG doesn't matter, and we can operate as if we did, essentially. So for this trade to play out and for me to be confident in price reaching towards these liquidity targets, right, this old high and this old high up here, there has to be liquidity taken on the other side of the market that is going to sponsor the move to the upside, right? We don't want to enter a trade unless price has taken liquidity. So what are we looking for? Now, I've mentioned old highs and I've mentioned equal highs as well and equal lows. However, there's another type of liquidity I like to use, which is session liquidity. So this blue box here is Asia session, right? The high of Asia session and the low of Asia session is a great source of liquidity. Not just that, but you can also use London session and you can use New York session, which are these boxes. But for this example, it is Asia that actually got swept. So essentially, price has taken out Asia low into this FVG, right? And we actually did take out this old low over here. It was a very shallow sweep. So now price has taken liquidity. It has the fuel, quote unquote fuel, to go and target these old highs, right? Not only this, but you may notice that price has also built up these equal highs here, okay? So we have three targets now for price, right? We have equal highs, have this old high, and we have this old high. And we've taken out Asia low, and we've taken out this old low. So you can see essentially that the market is just bouncing back and forth between liquidity points, right? Which is why for me, it is a non-negotiable within my trading plan. So once price has taken this liquidity and we're expecting it to go up here, all you need to wait for is for price to change state. And you can see here we form this bullish order block, right? Which signifies that we've gone from respecting bearish arrays to now forming bullish ones. After we get that and price has taken liquidity, we should just build bullish order flow to come and take out these highs, okay? And as you'll see, we come into this order block and then we begin to move higher and we actually take out this level of liquidity. Now, you have to understand that once price takes out a level of liquidity, it can come back into the range. It's essentially called external range liquidity and internal range liquidity. And it's all the market will ever be doing, right? It will be going from external to internal, from external to internal, just like that. So essentially, internal range liquidity is an inefficiency. And external range liquidity is some kind of high or low. So once we take out these equal highs, that's external, and price should come back to internal. And we have this FVG here, which is an inefficiency. So you'll see that price comes into there and then we begin to move to the upside and go and target external range liquidity, right? Notice how it's just gone back and forth, back and forth. So as you can see, price has come and targeted that next high, that old high, which is external range liquidity. And if I let it play out again, you can see that we go and we take out the final target. Now, once it's taken out both of these targets, what are they? They're external range liquidity. So we can expect price to come back to some kind of internal range liquidity. And as you can see, they do just that. Now, if you want to know more about this specific model that I presented in the video, I've actually put it in a free document that you can download to save you from coming back and actually having to refer to this video. So it'll save you a bunch of time if you ever have to go and refer to it. So I'll leave a link to that in the description. And for those of you that are interested in mentorship, I'll leave a link in the description where you can go and find more details about that. But yeah, I hope you found value in this video, and I'll catch you in the next one.